All right, so crypto remains at the mercy of the stock market for yet another week, and you can see the performance is not looking too good, right? Bitcoin, cryptos, all down yet again. If we go to the stock market and we look at the weekly, there is some serious pullbacks which are currently taking place. But in today's show, we're going to have a look at what could happen in terms of a short-term short squeeze. There may be the opportunity for that, but I'll show you where you can only get long-term optimistic. There's still a lot to look forward to within the markets, and a lot of things that need to happen. It's a major economic impact week that we're going to be looking at, and the volumes are very low. If you look over here, you can see specifically focusing on the open interest, which has dropped off quite significantly. There's your open interest ever since those highs. It's just pretty much cliff diving. There's to give you some additional perspective. So rolling over, open interest dropping significantly, showing that there's a lack of market participants coming into the market. And our 24-hour liquidation levels have been in the region of about 200 to 250 million, which relatively speaking, considering the size of the crypto markets at the moment, is a very small number. That's a tiny number. And if you look over the last hour, we have some longs getting liquidated. I do want to talk about what's currently going on the short term. So we'll get to that. There is the potential for an actual short trade, which you could be taking there with pretty low risk. So we'll get into that as well. You can see the 7-day exchange volume continues to put in a series of lower lows and lower highs, right? And this is a major week, big week. So smash the like button, hit the bell notification, and subscribe to the channel if you're not already subscribed, because you definitely don't want to miss any of the shows this week, specifically looking at the US FOMC statement, which is going to be coming out, and the federal funds rate decision. This is going to be something that all eyes within crypto natives are going to be looking at. Major events, and this could spark the next move, right? Not only for crypto, but for the stock market as well. When things start to break, the Fed usually have to intervene, and it is starting to look like, for the first time, as stubborn as the market has been grinding onwards and upwards, while the Fed have remained headstrong, for the first time, we're now starting to actually see things break. And if you look over here, in terms of poly-market votes, will the Fed end QT before May? Unbelievably, the votes are sitting at a 100% chance. So I'll put a tweet on this over here. Poly markets pricing in a 100% chance that the Fed ends QT before May. If Powell even whispers that QE may be ending, or QT may be ending and QE may be coming at the next FOMC meeting, well, ultimately that can lead to the next big move, especially when you're focusing on the volumes, which are very low, right? Declining 7-day exchange volume coming all the way back down to those previous levels. If we look at it, over the last, let's just quickly reset this. If we look at this over all of time, well, you can see this is a pretty serious base over here that you want to hold, probably around that $50 billion mark. So a lot of work to be done there if you do want to keep the bull market hopes alive. If we do focus on the global liquidity, the high time frame cycle suggests that it's still in that bullish phase, right? Still pushing towards the upside, but we need to see a spillover between the M2 money supply and the global liquidity, where there's an abundance of capital, and then that tends to rotate into the highest risk assets, and that's only when your altcoins will run, right? We haven't seen that yet, and you probably only get that when you're properly in QE, which we still theoretically in quantitative tightening, where the Fed are still tightening, right? So the stock market is one of the most important things to be looking at. This has been one of the quickest, fastest corrections that we've ever seen in terms of the S&P 500 and the rest of the stock market's trading days taken to move 10% down in terms of a correction. Well, these have been the historical ones: 12 days, 14, 20, 15, 9, 6, and this time 16 days, right? 16 days. And if we look forward to what happened 1 month, 3 months, 6 months, and 12 months later, for the most part, prices were up, right? If you look on average, you were up 2.8% after 1 month, you were up 7.5% 3 months later on the stock market, and then you're up 14.7% 6 months later and 13.7% 12 months later. So longer term, there is still a possibility for a bounce. Short term, there is also an opportunity for a short squeeze on the stock market, but I'll show you the levels that you need to be paying attention to. And part of the reason why is throughout this rally over here, You can look at the standard deviations away from the mean. So you use something like a moving average. Oftentimes people focus on the 200-day moving average as your mean, right? And then you look for the mean reversion play. So depending on how many standard deviations away you are, the higher the chances are that you bounce, right? So one standard deviation away might elicit a small bounce, 1.5. You have a bigger chance that you're going to get that mean reversion. And then 3 standard deviations away, which is what we're currently experiencing, should show that in the short term, there's a very high probability that you put in at least a little bit of a bounce, right? Now, this is what you need to be focusing on, because there is still bearish divergence, right? The bearish divergence is beginning to play out. You can see price was rising on the high time frame, the weekly time frame for the stock market. The RSI was declining over there. And when you do see something like this and you have a major extension away from the high time frame mean, in this instance, the 200-week moving average, then you should be looking for a move back down to fair value. Now, remember, the 200-week moving average is constantly rising. So it depends when you get to that level. If it happens later on this year, well, that could still mean that price finds support over here on the strong horizontal, which is kind of my main target right now for the S&P 500. That's coming in around 5,200, which you can still see means lower. So going back to this, 3 standard deviations away from the short-term mean, the 200-day moving average. Don't confuse the timeframes, 200-day moving average versus this, the 200-week moving average. So short term, your 3 standard deviations away could lead to that little bounce as I've drawn in over there. You're going to be looking at your 0.382 and your 0.5 fib level taken from the high to the current low. That's a bounce into 5,700 to 5,800. Watch for a little bit of resistance coming into that area. If it leads into the lower high, then you could continue to roll over, and that's where you start to look for the 200-week moving average to continue on up and possibly meet that level. Now, again, short term, yes, short squeezes are possible, but high time frame, there are some major warning signs. Again, now looking at the really high time frames like the monthly for the S&P 500, that's your stock market. Remember, you put in as well those bearish divergences with all major momentum oscillators back in 2021, and we identified many times the similarities that we're seeing currently with the current stock market versus 2021, which is where that top was put in, right? So even when you get that short-term bounce, unless you can start to break and hold above this and confirm a massive bear trap, right? A big shakeout over here, and you can get price back above these breakdown levels, which means you need to get way higher. You need to get above 6,000 on the stock market. If you can't do that, you have to look and default to the monthly and take it seriously that you're getting these bearish crossovers over here with bearish divergence, with all major moving averages and momentum oscillators. And that means you'll be looking for lower prices, right? So Mondays, which was today, of course, has typically been bearish, right? It's been bearish for the last couple of Mondays within the stock market. People seem to not like Mondays, but happy St. Patrick's Day, because today is St. Patrick's Day. And if we do want to pull out the data for St. Patrick's Day, it has actually been green very often, right? Sticking with the theme of St. Patrick's Day. So only time will tell. We'll see how prices open up today. But again, if you do get that bounce, please do watch for the at least the resistance. We have had a high time frame weekly market structure break. And the last time that we saw that was in 2021. And that led to, I think, 190-day correction. There will be ebbs and flows, lower highs and lower lows, which means you still get big bounces along the way, which could at least bode well for short-term moves within the crypto market. So we'll talk about the crypto market in just a moment. But there it is. Here's your stock market. Major breaks of structure across the board on NASDAQ, on Dow Jones, NVIDIA also putting in a big move over here, trying to get back above the 200-day moving average. MicroStrategy also putting in a really nice move over here, but still the chart doesn't look good over here. Lower lows and lower highs. Coinbase still struggling underneath that key level that we had been focusing on. This was the upsloping trend line. Key horizontals, you had your CME gap, you've broken below that. Also, when it comes to Bitcoin, a lot of people focused on that CME gap, which means I think plenty of traders took the long trade looking for a little bit of a bounce, which means there's a lot of stop losses below that level. DXY also still hovering around that mid-range over here. It hasn't put in any substantial bounce yet. So I'll be keeping an eye out on this for bounce into the underside resistance which should also lead to the 0.382. So that upward move in the DXY will typically create the next leg down for Bitcoin, because for the most part, when the DXY is rising, Bitcoin is dropping. When the DXY is dropping, usually you see Bitcoin performing at least decently, right? Okay. USDT dominance, another very, very important one to look at. Still suggesting over here higher lows and higher highs, and looking for an ultimate target all the way up into this high region over here. So let's just quickly put that on screen. Still looking for a move up over here. That would be the ultimate low for me on Bitcoin. If it gets into this region, I'm expecting a major drop and reaction from the USDT dominance, right? So still keeping all eyes on that. Bitcoin dominance, same thing, still rising at minimum. I'm expecting a move up to about 62.69%. Of course, depending on what the Fed do and say on Wednesday, that will drastically change and affect most of these charts, right? So make sure that you're here each and every single day. Bitcoin, let's have a look at Bitcoin. Bitcoin still holding the 50 moving average on the weekly time frame, which has been significant throughout this bull run. So we'll see if they can get a move up from here. Again, you really only enter into a zone of safety if you can start to take out the area where we exited, right? $92,000. That is the key area that you need to break back above, which is your breakdown level. Otherwise, you have to look at it as short-term bounces. Now, if you can get a sustainable move off of this 50 moving average, like we have seen throughout the price cycles, as well as within this bull market that we've been in, well, that could keep the hopes alive, right? Because on your rainbow chart, which is a logarithmic chart that shows undervalued, fair value, and overvalued for the Bitcoin price, well, you can see over here, despite the fact that we hit $110,000, Bitcoin hadn't even made it out of the undervalued zone, the still cheap zone, right? So you're still stuck within that. If we break down, if we lose $70,000 on Bitcoin, and the stock market moves into a bearish trend for around 100 to 200 days, like we saw in the price cycle, unfortunately, it's unrealistic to expect that crypto would succeed, and that would make this quite literally the worst crypto cycle gains wise that we've ever seen, right? So please do watch that. Now, this is the most important chart to me. I continue to drive this chart into the shows and remind you of its significance and importance. It's been the parallel channel with a lower boundary that's held price up. That would be the main area of interest. If price came into there, I would be a buyer, looking in the short term, at least, for a little bit of a bounce. Then you have your upper trend line over here, and then you have your midline, which is more fair value in the short term. But the significance of this chart is this, right? This is why it's so important to get above this $92,000 level. This was your range low, which was governing price towards the upside. You needed to see price hold that. You broke below. You also simultaneously broke that midline level. So we can quickly just draw that into the chart. Just give me a second over there. So we're looking at this level over here, very significant. We're looking at the mid level over here of the parallel channel, very significant. So there's an intersection there. That intersection was lost, right? That intersection lines up with all those key moving averages, the 3, the 9, and the 30. So the yellow, the green, and the purple. Right now you have the yellow below the green, below the purple. Purple's still rising, but it will start to roll over. And if it does, you have a 100% short trade activated. As it currently stands, this suggests 100% cash position. 100% cash position, according to my trading system, which is exactly what I'm in, is 100% cash. If that purple moving average begins to roll over with price failing to get back above this 92K level, that becomes a 100% swing short trade with leverage, right? You have to open up a short trade with leverage, or unless you want to use options. Now, I would expect at some point there is going to be a short squeeze into this region, and that's going to be the $1 million question for you guys is, if you haven't exited your positions, do you exit over there? That's going to be a major lower high, because that push into the zone and rejection is likely where you start to see this moving average roll over. Now, it will take time. If you look at the at least this moving average, this could only happen sometime around May. So it's going to take time to try and get back above this region. But the major concern to me, so going back to the point, is firstly, the intersection has been lost. upsloping midline. You lost the key horizontal. But what's more important to me is the time spent there. This is now a 5-day chart. So you got here 5, 10, 15, 20 days. 20 days spent underneath that key horizontal, 20 days spent underneath the diagonal. And now we're looking at our 25th day, right? This is the 25th candle over here on a daily time frame, spending a lot of time underneath that level, which is not a good sign. And that suggests at minimum, at some point, we should be dropping down to this level. You can feel free to vote. There is a poll section over there which you can vote. I'd love to know your thoughts. Let's click over here. You know, the question is, when does that happen, right? Will BTC make new lows this week? Yes, 72,000 is coming. 60% of you said yes. No, it will hold $80,000. 40% of you believe it will hold. So could it hold? Could bulls be stubborn enough and continue to maintain that position? I think it is definitely possible. So it's not a question of if. For me, it's more a question of when, right? At least according to this chart. Easily, you can change my mind if you can see bulls push price up over here and hold it like this. I'll flip bullish again. If that happens, I'll flip bullish. Right now, that is not the case. Right now, I have to maintain a bearish bias despite the short-term price action stuck below the high volume profiles, the points of control at $96,000 from this overall trading range. Volume continues to decline. So again, don't mistaken a short squeeze, right? A short squeeze is entirely possible. As I've mentioned over here, we are coming off very low volume, right? You can see it over here in the liquidation heat map, right? There hasn't been too many liquidations over the last couple of weeks and months. Not only that, but you can see the volume declining over here, right? Low volume makes for an easy move. Think of it as an illiquid meme coin, something that's trading at a market cap of, let's say, like $4 or $5 million. You know, a whole bunch of players decide to come in and market buy. What happens to that coin? It goes very quickly from $5 million up to $15 million, doing a 3x in a matter of minutes. We've seen this with many meme coins. We've had a lot of experience with that. It's no different on the global scale when it comes to something like Bitcoin and crypto, right? Which now has institutional interest as well as nation state interest, which means if they do decide to come in and create market buys, it will create a godlike candle in this low volume environment. Then your question is, can it hold above these high volume areas? And if the answer is yes, it can maintain above these key zones that we're looking at, then we can jump back in and get long. Until then, it's definitely advisable to remain highly cautious and protect capital. That's capital preservation is the name of the game right now. You want to be very careful with your capital and not waste money, not lose money, right? The most money is made in easy on mode, right? When it's easy mode, where everything is going up, where there's high volume, high liquidity, that's where you make easy money, quick money. Trying to play the chop over here is what gets you absolutely killed, right? Now, short-term traders who are skilled to do that, absolutely. We do short-term trades in 𝗪𝗏 as well, the private Discord, of course. So if you do want to jump in and join there, of course, you're welcome to. But for the swing traders, you're probably best remaining cautious. Capital preservation is the name of the game. So downsloping trend line, of course, you need to break that. If you can break this downsloping trend line and get price action back up, so if you get that godlike candle, some big move up over here, and you can break back into the trading range and break that downsloping trend line, that's where you can start to gain interest. There's no need to FOMO in. If you do see something like that, there will be pullbacks along the way, and you'll probably get the next high low. So then you're looking for something like that, right? Right now, price is holding below all these key moving averages. And again, also, if you do get continuation towards the downside, the next thing then we need to be careful of is that we don't get a cross between the light blue and the dark blue, which is your 200 EMA versus your 200 MA. If the 200 EMA crosses below the 200 MA, that sometimes can signal a bit of a death sentence, right? If we go look previously, let's just let that load up. There we go. We can have a look previously at what happened. That would look like this environment, a sharp drop down, 200 EMA crosses below 200 MA. You will get a big relief rally. That took price essentially from 33K all the way up 46%. That's the type of relief rallies you can expect. 40, 50% for Bitcoin, 200, 300% for some altcoins. Big moves. but into resistance, and then obviously you go down, right? Now, of course, I'm really, really hoping that we're not going to get a multi-year bear market. And we also spoke about the bullish case, right? One of the bullish cases that we're looking at is around that RSI, right? We're keeping all eyes on this RSI on the weekly time frame, which is in the gray box below, down into this 44 region. It seems to be holding there as support, and as long as it can continue to do that, there is some hope that remains alive. But I want to remind you that it took time, right? The prior times, you can see over there, that was 7 bars, right? 7 weeks over there. The next time over here, you looked at 9 weeks, right? 9 weeks of the RSI hovering around that low region, creating a reaccumulation range. So we should be able to flip our bias if you can see this 83, 80K region continues to hold as support, and you form a trading range. It will start to look like reaccumulation, but it's a bit too soon, right? It's a bit too soon. If we do that, right? If we form a reaccumulation range and we spend time there with that weekly RSI maintaining 44, what I would expect to see is the funding rate go negative, right? This becomes a good sign. Backwardation is another word that we use for this. Markets typically operate in what's called contango, where the futures price for each contract. So we're in March now, so May should be more bullish than March, and then April should be more bullish than March, May should be more bullish than April, and June should be more bullish than May. Backwardation is when the futures contracts are more and more pessimistic consecutively over time. So each consecutive month becomes more and more pessimistic. And we can see this in the futures price action charts. Remember, some people trade futures contracts, not perpetuals with no expiry date like we trade. There's traders that trade futures contracts for each respective month. And that futures contract tells us in the form of the funding, when it goes negative, whether we're in backwardation or contango. If we start to enter into strong backwardation and we're maintaining a range low level and we're not breaking down, that becomes a buy signal. But again, we're not there yet, right? We're not there yet. So we've got a little bit of at least negative funding over here, but I would like to see a little bit more of it. If we do drop this down onto, let's actually go as low as like the 5-minute time frame to see exactly what's going on over here. And let's throw on the open interest. So you can see over here, let's have a look. There we go. Right now, there are longs that are attempting to build over here, right? So you do have some longs that are trying to build. And this is what tells me that, you know, based off this move over here, it's probably better to be looking for the short trade versus the long trade. When you focus on the price action over here, you have a little bit of a swing failure pattern. You can see this candle attempted to push up, nice big move over there and failed. Theoretically, that is fair game to start to look for a short trade, right? So if you were building a short trade, of course, the closer you can get to here, the tighter you can place your stop loss. But theoretically, you could be taking a trade back down to the lows. That's a pretty sizable trade. If you get it from the high, if price moves up and you can start to take it there, that's giving you about an 8-to-1 risk to reward ratio, which is phenomenal. Otherwise, you need to, if you're taking it from here, it's still a favorable trade, but I'd leave a little bit of room to build the position. You're getting rejected off that 50 EMA as well. So it's additional evidence over there. If we go on the hourly, well, you can see as well, you're being capped by both the 50 and the 200, which currently have a bearish cross, right? So in validation above that wick, short trade would look like this, 85,600-ish. I'd leave a bit of a tight stop loss over there. Entering into the short trade, trying to scale in, right? Leave a bit of room for yourself. If price does spike up, expect it could do something like that, right? You could see price continuing to grind. You just don't want to see any candles above that wick that occurred. At least I'm on +4 UTC time. That was at 8 o'clock. So depending where you are, you should identify it on your chart on the hourly. That's your invalidation, right? So building a short position over here, you know, you can see longs trying to build into this resistance over here. And if they do get taken out in the short term, that could create the cascade back down to the fair value gap at about $77,000. Now, of course, you would need to take some profits along the way, right? I'd probably take the majority of my profit into this region. So if you are going to be taking that trade, just below $80,000, 79K, I'd probably take half profits and then I'll take full profits over here at $77,400. So if you do want to take that trade, guys, by the way, there is a link in the description below. This is the most insane sign-up bonus I've actually ever seen in my life. It is 𝗨𝑏𝗡 over here. If you look at 𝗨𝑏𝗡, there's a link in the description below. Here is what the sign-up bonus looks like. It's absolutely insane, right? So firstly, if you're depositing anything under $3,000, you can enjoy up to a 50% bonus, 50% rebate, right? So meaning if you put in $100 or more, you're getting $50, right? $100 or more, they're going to give you $50. If you put in $500, they're going to give you $250 for free that you can use to trade with. If you put in $1,000, they're going to give you $500. Now, what if you're a bigger trader? If you're a whale, right? If you're a whale, you can get up to 20% rebate, meaning even if you're putting in $100,000, you'll get $20,000. So that you heard that right. You put in $100,000, you get $20,000, right? Which you can use to trade with. You can open up a 100x leverage trade on that if you want with the $20,000. So what are some trade opportunities, right? Well, I've given you one. This would be the short trade setup over there. Again, guys, if you want that, the link is in the description below over there. That is 𝗨𝑏𝗡, $20,000 sign-up bonus and 100% cash back on every single trade, right? So basically, it makes it free to trade there for now. Okay, cool. Also, I want to remind you, Whale Room, the link is in the description below if you do want to join there. That is the private Discord. And then Whale School, we are currently taking sign-ups. And if you do sign up to 𝗨𝑏𝗡, that is also your ticket into Whale School, right? Put in your email address over there, click sign up. That is how you get it for free, as opposed to paying the $2,000 fee for the course, right? All right. Next, the other trade that I want to talk about is Ethereum. Now, I think that, the market can remain irrational longer than traders can remain solvent when they counter the trend. The trend is down. Don't get me wrong. It's absolutely down, especially on Ethereum. Lower lows and lower highs has been the name of the game, but I've spoken about the potential for building that position between $1,000 and $2,000. And you can see that record amounts of ETH shorts are in the market right now, right? Extreme short positions over there. And again, you know what that means is always a chance for a short squeeze, especially in a low volume, low liquidity market, right? So that was one of the trades that we were looking at. If we go through to ETH over here, let's go there. So it is holding that trend line. I said it is very, very likely that it's going to come down into $1,500. And the way that we're building a position over here is we're using the trading bots on Pionex. So you can see these are the trades that we have at the moment. Currently the hedge position is in profit. For those of you that do want that, there is a link below where you can actually copy those bots. There we go. So we have the hedge position, and then we have the ETH long position. So it's currently scaling into the long, right? It's down 1.54% because, of course, ETH is pulling back. I would expect that this would go into a little bit of a drawdown, but eventually, those orders should be fulfilled all the way into this gray box area if we do get a little bit of a breakdown. So keeping all eyes on that. What else? We can have a look. There's been a lot of excitement around hype as well. We can have a look over here. This is still a pretty bearish chart, high time frame. Don't get me wrong. But of course, it does create the possibility that you could get a move all the way up into 18. We've been pretty explicit about that. The only chart support that we have, technical support, has come into this area where price is holding. So I'm sure a lot of traders are looking at exactly this, tight stop below there. You can trade this into the underside resistance, right? That's a 4-to-1 risk to reward ratio. And the move from current price up there is at least 33%. So there are opportunities, right? There's opportunities, but you need to be an active, nimble trader. You need to be focused constantly on at least on what's happening within the market. You can't take your eyes off the price. So all of this has been dropped in Whale Room, right? Our traders are crushing it in there. If you do want help with the short-term trading, all of our traders are taking the short-term trades and making a lot of profits along the way. The link is in the description below over there. So again, just to summarize, for today, you could easily see a short squeeze, and that's mostly based off of the mean reversion, the 3 standard deviations away on the stock market, the mean reversion play. But high time frame, there's no doubt that the stock market has also broken structure. just like Bitcoin. And the most important chart to me right now is this one as a swing trader. As a low time frame trader, there are other opportunities for that jump into whale room. But as a swing trader, I will continue to maintain a cash position, waiting for price to collapse eventually into $72,000 to $68,000, 68 to 72, or alternatively to reclaim above the $92,000 breakdown level, which is exactly where I exited live on the show. I covered that as well as in the Whale Room Discord. So that's it from me, folks. Thank you so much for watching. I will see all of you on the next one. I hope you have an absolutely stellar day, and cheers.